Good day. Ira Epstein of Linn Associates with your financial market wrap-up for this Tuesday, the 30th of July, 2019, just after 4:30 p.m. Central Daylight Time. A warning for all. If it ever looks to you like these videos are out of focus, we use pretty good equipment here, and it's not. It's auto-focused and all that other type of electronics. Try to refresh the page. A lot of this comes through YouTube, and as it comes through YouTube for you, because these are free videos, the ones we host are a little different, just refresh. It might fix it if you don't think these are clear pictures. We know they're crystal clear when we shoot them. So let's talk about the market, because tomorrow we go into the FOMC meeting, and it's a two-stage event tomorrow. You first get the 1 o'clock announcement, that's Central Time, p.m. Then after that, about a half hour later, Fed Chair Powell will begin his press conference. That could be the other event. We don't know what he's going to say, how he's going to say it. He's very good at what he does. He's now become seasoned, as I like to call it. The market is baked in, I want to use that word, baked in, a quarter-point cut. So the disappointment would be not getting that. The market does not think a half-point cut would happen, but if it did, that would be the surprise to the market. We saw today, and while you were down in the Dow 34 here, by the end of the last trades of the day, you were up a little bit, and that's because Apple's earnings came out very good, and the stock in the aftermarket was up over 4% from what I was seeing on the last trades. In the metal markets, it appears that the metals are still looking for the Fed to be embarking on this easing of interest rate policy, and gold, it appears to be taking that to mean clear door upside. That doesn't mean it won't run in and stumble from here to there. It doesn't mean that I'm right on what I'm saying. It just means that appears to be the case. We had a sizable rally today in the energies, ex natural gas, which was up 2 cents, but the others were where the real rally was. We're looking at API data. That'll be in my evening report for you. And obviously, when you're up that much, gives you an idea what that data was on the friendly side. And when you look at the grains, a little bit lower, as the growing season is on us. Now, when we take a look at the weekly area chart of closes, for the week we're down 12 points. It's a correction time. Not big. We're in a correction mode. Why? Uncertainty as to what the Fed's going to be, and then you've got Friday's jobs data. And when we see the jobs data, we'll get an idea as to what, if anything, is a shocker or non-shocker. The market is looking for 166,000 jobs and about a 3.6% unemployment rate on Friday. That's the bar. Now we'll see what happens. When we take a look at the action, you can see today you extend it to the downside. When I put on the swing lines, you have lower highs, lower lows, and an outside day down today. You negate the impact of an outside day down by taking out that day's high, which would be today's high, within the next trading session or the one after that. So in plain English, on Thursday or Friday. If that occurs, often the market tries to move to the closest above it of a moving average or a potential Bollinger Band. The word is often, it doesn't have to. Right now, what the market's been doing is fighting a battle at the red line. I think you see that. The 18-day average of closes. So we went up, we've pulled back into what I call that line in the sand, which makes, to me, all the sense in the world going into an FOMC statement and press conference. In terms of the Bollinger Band resistance, it was right here, and now the market has retreated from that the way that it did back when it hit it up here, and I realize it went a bit higher, but it still ended up retreating back to that number. It was not this type of move that carried here before it hit anything. That's my point. So I think this is normal. Certain element of people might have wanted out of the market in front of the FOMC. Is the bias down? No, the market still closed over the 18-day average of closes. Where's the momentum? The momentum is overbought, but it is not turned down. That's the important thing. And we'll get an idea tonight if it's going to turn down or if it's going to start pointing back up here. It stalled right into an overbought area. I consider anything over a 70 reading in slow stochastics an overbought number. Both numbers can be there or one can be there. That begins the overbought. So I have a market that got into that area, hit the Bollinger Band, pulled back to the 18-day average. In terms of the NASDAQ, back to the 18-day average, regaining what? that neutral zone, as I call it in the market. Here's a little different. The momentum of this market has, in fact, turned down. Interesting. Dow, back to the 18-day average. Momentum has been down. A little different status here. And it's down enough where you're no longer in an overbought territory. So I have a market that's in a small downtrend. The market closed today on the swing line. It's not in a downtrend. Well, let me phrase that right. The swing line's in the downtrend. The bias isn't, because you finished at 27,164 over the 18-day average. They negate each other. And when that happens, it's just that I see the market trying to figure out from that number what to do next. Now, the market that acted really good was this market. If you take a look at the Russell had no momentum up or down as of yesterday. We had a pattern of higher lows and lower highs. You can see the support I was looking for would be, if it fell further, the 18-day average, and if that gives ground with this low, maybe you get to the 100-day. Obviously, if you continue the break, you got the potential of the lower Bollinger Band. What it did today is it breaks down to 1557.40, just missing the 1556.60 100-day average, spins around and has a huge reversal day up. Guess where it stops? The upper Bollinger Band. Just ran into that wall. By the way, if you were running some pivot point numbers, they were pretty interesting on this today too. So now what we have is a market that's overbought, has hit its upside target. It's not trending. You have a lower low and a higher high. These markets have gotten themselves into a position where now they're waiting for tomorrow's important data. And as I said, 2 event data tomorrow. Statement, then the press conference. We get a day of a pause. Then you're going to be worried about the jobs data first thing in the morning on Friday. In the VIX, I would not be surprised if the market rallies up to this, the upper Bollinger Band and the 100-day average for resistance. And again, I'm going to repeat, I wouldn't be surprised if when you first hit a Bollinger Band, be it the bottom or the top, that in this case, if you get up there, the call writers come out. The last time we broke down to a Bollinger Band, right here, you got back up to the 18-day average of closes. When you hit it here, you got back to the 18-day. Hit it here, back to the 18-day. Now, the difference between writing a put and a call is when you're low in the range, trying to get, as I said before, from let's call it 12 to 8, it's pretty darn hard. Real hard, because you're giving up half the value. To take a market from 14 to 18, much easier. So as I view it, in my own opinion, there's always more risk in writing the call than writing the put in this particular range, this low. That's all I'm saying. Doesn't mean I'm right. When I look at the bond market, the bonds are fighting a battle, and if you don't see it, I don't know what more to say. At this 18-day average of closes, it's letting the lower and the upper Bollinger Bands come into play, and momentum is just flat as can be, and no, it's not in a trend right here. When you take a look at the 10-year notes, if you look at the settlement, 127.11, it's right on the 18-day average of closes. The market has been fighting its battle there. It's had a downtrend that hasn't been able to grab traction just yet. If it does, the lower Bollinger Band might prove to be first support. And if the market rallies, the first resistance, the upper Bollinger Band. Let me tell you another thing you got to be nervous about. Whenever you get this long pattern, that you stay in a Bollinger Band and churning, it's like a pressure point. It's like a pipe, and I've said it before, with a spring in it, and it winds and winds till you can burst out of the end of it one way or the other. It appears to me that we're getting into that type of pattern. When we come to TLT, it's the same. I see this overall sideways pattern. I see a market that's playing day after day at the 18-day average of closes. It has frustrated both the bulls looking for upside gain and the bear looking for the downside, because you're not hitting either the upper and lower Bollinger Band. You did that back here at the beginning of July, the end of the first week, and since then you've just drifted within this market, frustrating traders. In the dollar index, the trend remains up. You've got the higher lows, the higher highs. Where did the market find its support? The combination of the 100-day and the 18-day average of closes, and it just, once it cleared this level, it really hasn't looked back. It just hugged the upper Bollinger Band with an embedded reading, a continued sign of strength. You lose that strength if the red line closes under 80 in the slow stochastic. Until that occurs, I look for the buyers to show up on breaks. In the euro currency, this is a warning sign. You had an embedded reading. Do you see that? Both numbers under 20, they're under 20, it goes on and on. You just stayed like that. Well, today you've got your first warning sign because you got a number that closed over 20. And that would probably be a sign for bears to be lifting positions. I'm not saying you're bullish. I'm not saying the trend is necessarily over. I will make that statement if tonight, when the market goes, if that red line jumps sharply higher than this. Then you're putting into play the potential for price and the 18-day average to come together. Got to be careful, though. Major reports in an FOMC meeting where markets already fully anticipated a quarter-point cut. I know a lot of traders say it's going to be a nothing event. Okay, tell me what the statement's going to be afterwards is what you're faced with. Does it leading to another September cut, a December cut? Will the employment data surprise the market on Friday and be either strongly bullish or overly bearish? I don't know. I know that the market's concerned about it all. That's all I'm saying. When I look at the British pound, Boris, as he's taken over, has told you it's going to be his way or the highway. And with that, the market is dropping down. We haven't seen the European Union agree to even open talks again. Don't know that they will, and this market's coming down. So we will see what it does. But at this point, pretty big impact on the British pound. Since he's taken office, by the way, you've gone from around 125.5 to 121.5. In the Japanese yen, the market has been slipping, as you can see, and this is because the yen is often associated with a safe haven status. You can't possibly tell me you're buying this market for the return on your money. They're a negative interest rate. You can't tell me the economy's got inflation, their currency's doing great. I won't buy that at all. It's deflationary, and they haven't been able to get out of that for over a decade. So what you've got here is a market that responds to world events, and right now, things appear calm. In fact, I haven't heard too much about Iran in the past 3-4 days. Support, if it encounters it, could be the 92.03 to 91.97, the lower Bollinger Band 18-day average, and you are oversold. Caveat, FOMC jobs data. August Bitcoin, still have the embedded reading, lower highs, lower lows. I was laughing today as Facebook is talking about Libra and how it's going to protect things. I give up on that. In getting into the Brent versus WTI crude, the spread is pulling back. Now, we have been staying over since about the end of the first week of July. Once we got over this 18-day moving average of closes, the differential widened a bit, and it's narrowing. It's certainly not up to crazy levels, but it is narrowing in. So it puts the difference between U.S. crude, that's the way to think of it, and Middle Eastern crude, different levels. When I teach, that's what I try to explain to people. You're thinking what the difference are. I know there's grades. I know how it all works. But it's the easiest way to understand it. Then we get to the October Brent, and you can see the market's got upside bias, a lower low, a higher high, has been fighting pretty good at this 18-day average of closes, including today. The question is, will there be follow-through? If there's follow-through, two levels of potential resistance are, let's call it 65.99, the 100-day average, and 67.68, the upper Bollinger Band. Support back at 64.07, but I'm going to repeat, there's no trend. The momentum is up, the bias is up, but you don't have that pattern of higher lows, higher highs. In WTI crude, you've got a lower low and a higher high. Very similar pattern. Again, two levels of resistance, 59.47 to 60.79. Support back at the 18-day average. And again, momentum up, bias up. Then we get to the Rebob gasoline. Again, yesterday we were probably mentioning that, let me get back to that. If you rally, the first resistance is the 100-day average at 183.69, then the 184.93 level. The market today went up, and as you can see, hit both numbers and then settled under the 18-day average, but over the 100. So it's into that resistance zone, and again, momentum's trying to turn up in the market. Last, we get to the nat gas, which is locking in, and I'm fearful of this if I would be anything bullish, bottom pickers. Look at the slow stochastics. Both numbers are under 12, both numbers under 20, under 20, under 20. That's an embedded reading that you develop today. Now, admittedly, it's by the lower Bollinger Band, but so what? It can lock in against that number. That's what you got to be careful of. This has been one of the big breaks of recent times in natural gas, as you can see from behind me, and it's really carried the market with it. You know, one of the tools I look at when you approach Bollinger Bands, especially when they're with a 100-day average of closes, are pivot points. And if you don't know about pivot points, maybe you want to learn about them. What are they? How do they find support resistance? How do you work with them? I've created a 3-part video series. Just simply either call us, go to our website. You'll see pivot points on our free offerings. Just click on it. We'll be happy to send you out the videos, and you can click up here. It'll take you right there as well. I'm Ira Epstein. You have a good day, and I'll talk to you all tomorrow.